All right, guys. So I'm gonna give you all a breakdown of the euro, um, also pound USD, and then also S&P 500. If you do trade indices, just understand that S&P 500, US 30, and NAS 100, all of those guys move just alike. So you can literally take what's said on one and apply it to the other, right? And of course, all of the concepts you should be able to apply them full circle. All right. So as it relates to the Euro USD from last week, right? What we should have understood was that, and these gray boxes here are outlining if we can never reach it. So right here, right? price price had tapped into a weekly fair value gap, right? And this is actually, let's actually go to, just so we can get a better picture at this level, right? Okay, so this is a weekly order block, right? And here's that weekly fair value gap, right? So what I'm noting is the fair value gap premium and the fair value gap discount, right? And then with this red box, we'll outline the opening price of the weekly order block. Right, fair value gap premium, and you should understand that this last line is fair value gap discount. Okay, back here. Let's go back to here. Okay. Now, looking at price as when we came into the week, right? Of course, if we study, right, and first things is always first is we always want to understand what the weekly range expansion, right? What is the most probable weekly range expansion? And we answer that question based off the most recent or the previous draws on liquidity, right? Which in this case has been previous week's low, right? So of course, previous week's low is down here, but what we have to understand is that price is reaching a weekly fair value gap and also a weekly bullish order block, right? So when we come to a daily chart, we study the daily, right? What we see is, if we just kind of build a narrative around what price has done as it has reached this fair value gap, right? You can literally see the rejections in this area. Price is failing to close beyond this fair value gap discount, which is a good sign. And so with that said, we should anticipate higher prices, right? Because if we measure the current dealing range, which in this case, from a higher time frame perspective, rather it's weekly or daily, this here, from this high down to this low, is our dealing range, right? And then now that we have that dealing range, what we want to do is measure that dealing range, figure out where our premium and discount levels are, which in this case, this is our premium level. And then within that range, we want to say, where is the most probable draw on liquidity as it relates to this current dealing range, right? And in this case, it has to be this fair value gap, right? So remember, once the range is created, and price will, once the range is created and price reaches a higher time frame PD array, price will want to push back, and it will seek areas of imbalance and buy solid, in this case, buy solid liquidity within that particular range, right? And of course, above these daily highs is tons of buy solid liquidity. So one quick thing to note, let me put this back up here, is that if we once we measure this, all right, we can literally see equilibrium and the beginning of this daily fair value gap. There's a little bit of confluence around that those levels are almost the same. But if we look at the weekly, now the weekly fair value gap, once we measure that from here, and let's just take this. I'm sorry, not the weekly. It's I believe it is the daily. I'm sorry. All right, this is what we want to do. So let's measure that. And then if we look at the weekly, here, see here, okay, this is what I was trying to depict. Alright, so basically what this is here is we're seeing this weekly fair value gap, right? The 50% mark of the weekly fair value gap is there. And then when we push to a daily, the weekly fair value gap and the opening of the daily fair value gap, which is here, right? Those levels align. All right, but pushing back down to this area here, right? Once again, we have price pushing into a higher time frame fair value gap. This is also, remember, this is the opening of that weekly order block, and then we have equal lows created. Those equal lows are swept. Price closes back in the range, and immediately after that is swept, we have a strong bullish expansion, right? So this is the telltale sign that we could possibly see higher prices getting back to premium portions of this particular range. Okay, so coming to a 4-hour chart just to see what we have. Right, so from a 4-hour chart, we must understand that price is taking sell side liquidity. We know that once sell side liquidity is taken, price will reprice to buy side liquidity, and then also it will seek areas of imbalance on the premium side, right? So in this case, here's our buy side liquidity, right? Here's a pretty decent imbalance right here, and then of course the bigger imbalance that we all have already noted is this entire area up in here, right? So moving to a 1-hour chart. Actually, let's go to the 15-minute. All right, so on a 15-minute chart, right, once we play price through, here's our Asian session. Asia. Okay, right. All right, so here is London. And London, within the London session, right, price has given us a sweep of these lows here, right? So those equal lows have been swept. It's engineered equal lows. Those equal lows are swept. And what we can do from here is we can look at a lower time frame and see if we possibly have entries. But down in this area, I don't necessarily see anything that would have tipped us off to take entries. I mean, we can see it in hindsight and say, oh yeah, I would have taken that, but I don't think that's very realistic. What I do see is though that this whole area is balanced, with the exception of this small area here. But keep in mind, we are at this true day opening price, right? And then this imbalance right here. So remember, everything that we're doing, guys, is all we're doing is once we see direction is chosen, we're literally just trading the imbalance, right? So with this when this imbalance is created, right, even after discount, you could have just taken this whole area here, traded that imbalance. And now the only thing with this being such a steep run, the way you manage this trade is solely tailored to who you are as a trader. But let's play this out. And then also let's check the times, right? This mitigation here happens right at 3 a.m., right? Time and price. See that? And then this here happens, what is it? Maybe right at 2 a.m. Cool. All right. So let's look left and see where we are in price. Okay, so keep in mind this is previous week's high, right? We're gonna just make that a bolder print. And price is, what is this, tapping into a fair value gap. Yeah, right here. You can possibly see it better on a 30-minute. Cool. Yeah. All right. So price, once it gets up here, it's only responding to this fair value gap right here, right? But keep in mind, price is bullish, and we want to trade pro trend until until certain market profiles present themselves. All right, so let's play this through. All right, so that low is created there. Market pushes up. Haven't even gotten to New York session yet. Right, here's the big opening, or the high of that weekly order block. You see price rejecting from it. Let's look at the hourly chart. Right, so on the hourly, right, we're responding to this fair value gap here, but that's not what we're focused on, right? We're trading with the the short-term higher time frame order flow is bullish because we're trying to get back to premium side of this particular range. But what I'm trying to show you guys here is here's a low that's printed in London, right? And once that low forms, once we get into the New York session, price sweeps that low, then we can move to a lower time frame to see if we get what we like to use as an entry drill, right? So here is a down, up, down, right? Here's a break of structure. Here's the imbalance created between this candle and this candle, and here's price trading back into the imbalance, and then we push away, right? So these entries here would look like this. From there, stops would go right up on here, and then of course we'd be targeting this overall high, right? So if we get there, it's about a 1 to 10, and even if you didn't get this entry, right, you could have gotten in on that one. Let's look at 1 minute to see if there are any late entries to have taken. So once we clear that, yeah. So here's an entry here, right? Here's an order block, balance. Once price pushes down here, once we clear this high, right? Same idea, same thing over and over again, right? We're just trading this imbalance, right? There's an imbalance at an order block. You can literally trade here, and then I would, with this picture, I would probably place my stops down here. So let's see what that looks like if you were to either scale in or just take the regular entry. Right, so even with that, it's still possibly a 1 to 4 trading scenario, which we cannot beat. But just understand, guys, what I'm showing here. Here's a sweep of liquidity. Here's a market structural shift, right? We've left behind imbalance, right? And then boom. And then honestly, here's your order block, a series of down close candles. Once price pushes beyond it, this becomes the order block. Once we clear this high of this candle here, and then what price does is it pushes back down inside the imbalance of that order block, right? So that's a little advanced. I'm trying to get you guys to understand what a true order block actually is, as opposed to what's been taught in the, I guess, mainstream SMC education, right? Because a lot of people have been misled, right? So price reaches that final take profit. Then, okay, so now we're inside of this London close time frame, right? So now here's a situation where we can look for reason to trade counter trend, right? So if price has been expanding or trending, right? So if there's been a trending day and we're approaching the London close and we're getting ready to sweep, in this case, buy side liquidity. So we have these equal highs here, and then you have these this low resistance liquidity here, and then what's more important is the imbalance that begins here. So between that candle and this candle is where the imbalance is created or birthed. And then so what you got is you have price approaching this level. Of course, if you would have left a small piece on, you'd still be increasing gains, but so we've just entered this London close kill zone, right? 10:30 to, I use 10:30 to 11:30, right? So now that price has entered that kill zone, what we can do is go back on the lower time frame, and then let's see if we can find reason to enter this particular trade, right? All right. So right away, first things first, what I see is here's our textbook pattern: up, down, up, right? Remember, this is happening inside of a higher time frame OB, right? So we're getting this. Once we get this break of structure, right, the only next thing that we look for is imbalance that is created inside of this area, right? So let's look and see what we get. All right. So no imbalance yet, but we do have a market structural shift right here. And what's key to this trade is time, right? Time. Market structural shift. All right, here's that imbalance. So if we draw this picture back out, here is price pushes down. The imbalance is forming here, and then all we have to do now is trade the imbalance that's forming here, right? Remember, all of this is balanced, right? Everything here is balanced, so price should not have a reason to go back up here. And we could also see this as, here's that breaker, and this high here fails to push back above this level here, right? So here's a failed price swing, and then we want to be sellers at or near that neckline or the point of failure, which in this case is right here, right? So once price comes here, then we would short. All right, so let's see what we get. Boom, there's our fair value gap. Boom, price taps right into the fair value gap, and that is definitely 50%. Right there, right, cool. Right at 50% of the fair value gap. So there's two ways that you could manage this particular trade. You could just take, full scale right here, or you could 50% here and then 50% right. I wouldn't go right at 50 at the mean threshold, but at least a little, maybe a pip under it. And then let's just kind of check out that RR. And then also you can either be aggressive or conservative with your stop. I would probably be more conservative in this case. And then ideally we would target this particular low here as an overall target. Or a first target rather. Let's come out to an hourly time frame and see. Alright. So here's the imbalance. 30 minutes may give a better picture. Yeah. So I would be targeting this imbalance, right? London close trade. We're not looking to hang on to this for too long. But right away that's so 1 to 2. Here's the opening of that order block, and you can't go wrong with here. At the least you gain 5R here, but if you got in down here, that was 10R, and then there's another 2R tacked on to that trade, and price continues to go lower. It may even get to this fair value gap here. I'm not sure. Yes, it does. Bingo. Cool. Right. So that was Monday's trading, and then we move into Tuesday, right? And then Tuesday was a strange day. So this is what I mean. Not every single day price is going to print the most probable scenarios. Trading does not mean that we're to be active inside of the markets each and every day, right? What we should do is understand what our high probability price patterns are, and then from that, we become speculators of price, and if we don't get what we need, then we wait and we allow price action to form to gain greater insight on what could possibly happen next, right? But we shouldn't be forcing trades in the market because we feel the need to get inside of a particular trade, all right? So right here, here's previous day's New York low, right? We've just made an equal low with the Asia, and then here's previous day's high. So keep in mind, I am targeting previous day's high, right? Because right now we're in a series from the daily chart of attacking previous day's highs. Okay. So once all of this happens, and then we have a market structural shift here, right? And then we also get another shift right in here. Remember, we're trading with the higher time frame order flow. So here's a market structural shift right here. And maybe this comes down to a fair value gap, but this is not even in the kill zone, so I'm not going to focus on that. This is at 2 a.m., so I'm definitely not trading just yet. But biggest thing about this day is you're getting the Asian session is expanding well beyond the average daily range, right? So we've already taken out previous day's high, and price continues to expand higher and higher, right? So if we look left, let's see if there's anything to the left of price right now, right? The only thing that I see is this fair value gap right here. Right, so there's a fair value gap. This area here is a previous day's high, so we put that in bold, and then we'll come down to a 10-minute chart. And keep in mind that price may want to hold up at this particular level because it is a previous day's high, right? There's imbalance in here. Let's look at the 5-minute chart. 3, right? Sometimes you just have to walk the time frame. All right, so this is a true order block, right? Because there's imbalance inside of this area. Now, trades can come from here, because if we look at a 2-minute, then here's a true order block. Price pushes beyond it. Here's that down. It's up, down, up. This is a breaker right here, and so you could trade this fair value gap right here. But you need to keep in mind that you're trading counter trend, so you're not looking to hang on to this position forever, right? So here's the fair value gap. Here's the order block. So context, right? The overall context is that we've pushed, right? Prices expanded, gave a great deal of an expansion higher, and we've just pushed inside of a fair value gap, higher time frame fair value gap, right? And then price gives us that fair value gap here, and then so we can possibly trade this with stops above here. And then we must keep in mind that once price gets here, then we should be looking to scale off. But I probably would not have considered this trade, or considered taking this particular trade. Okay, now look, here's equal highs being engineered. So now we should be alert that we could possibly be looking for some type of bullish price action up and out of this particular area here, right? So we've just taken buy side liquidity. Here's an imbalance right here on the 2-minute. I'm not sure if there is any other imbalances on the maybe 3-minute or something. Let's come to a 5. Okay, all right. So this imbalance is completely filled. So at this point, this low should become our intermediate term low. And so here, this is a short-term low now. Here's an intermediate term low, right? An intermediate term low is defined by a low that completely fills in a fair value gap. So we have an intermediate term low that is being formed right over this area here where we expect to hold up as support, right? And it's 0.2200, I'm sorry. So big figure. You guys should be well aware of whole numbers and institutional levels at this point. So now let's see what kind of price action we get off of this here. This might calls for a 1-minute time frame. Okay, cool. All right, here we are, right here. So here is the order block. Here, right, series of down closed candles. Right, we have imbalance created inside. As soon as this is cleared, right, this becomes an order block, and all price does is it pushes back down to the fair value gap, right? This is literally the same stuff over and over and over and over and over again. You know, sometimes what I've learned is it's more so about being present. You know, and I'll be honest, you know, I'm able to show you guys a lot of this stuff now. But of course, Monday and Tuesday of this previous week, I was definitely not present in the market. You know, I had some things to deal with my daughter and her asthma. But nonetheless, right? Even if you didn't see it in this way, you should have saw a market structural shift, and then prices coming back down inside of this here. Right, here's your breaker. Bingo. Right, that's a breaker on a 1 minute time frame. And then, I mean, you can't see it on any other time frame, but here's an imbalance on the 2 minute. That price trades back into, and you know this is not in 5:30, right? Bingo. All right, so time and price. Come back down, back up. I'm just trying to wait until we get to the New York session. All right, so now we're at that New York session. If I can remember, this is that mean threshold of the weekly OB. Okay, so we leave these highs here. Nothing here. The only thing that I would say about this is that this area here is of course engineered, right? This is sell side low resistance liquidity being engineered. So you should only anticipate it being run out, right? You don't just take trades because it's there, right? Because nothing up here gave us any indication that price was ready to go lower, right? Okay, so there's another market structural shift right here. There's an imbalance created. Most of this is run, but going back to this intermediate term low, failure swing. I forgot to point that out to you guys. Intermediate term low, failure swing. And this here, I believe, is bouncing from this fair value gap that we saw on the 2 minute. I don't think it got to it the first time. Yeah, right here. See that? Cannot make this stuff up. 9 a.m. Right. So right inside of that fair value gap, right, we sweep this sell side liquidity is swept. Then we have a failure swing here. Once we get that failure swing, and we should all know that here's the point of failure, and you can enter at that point of failure, right? So if you did enter at that point of failure, you know, it may look like this if you're willing to just accept 10 pip risk. And then, of course, I would target these highs here at least. I'm not sure if price got to those areas. Okay, cool. So TP would have been hit. Four-minute time frame. I just like to scan through the time frames to see if we can find more reason for why a trade worked out or why it didn't work out. And now we're approaching that London close. So you know you should have TP here. You would have been inside of this trade, and you know you possibly could have gotten in here, and then this would have been an entry also. And I think, you know, price is getting ready to just fall off. Yeah. All right, so that's the end of the trading session. This day was this Tuesday? Cool. Yeah, that was Tuesday. So now we have equal highs here, right? More equal highs. And I am sorry Did not mean to play it that far. All right. So same thing, right? Of course, we're targeting previous day's high. Now, previous day's high was taken, right? So this whole thing is a big consolidation, expansion, reversal, retracement, reversal, right? Remember the price delivery model, which is consolidation right here, expansion, reversal, retracement, reversal, right? Here's accumulation, manipulation, distribution. Got me? So basically what we have is, and this is the most textbook model that you'll ever get in price, right? It'll almost always work out when you get this type of price delivery. When you take previous day's high, right, we get displacement lower, we have buy side liquidity here, and then price taps into 50% of the fair value gap, right? So if you were not a London trader here, right, which just comes back at 5:30, right? Keep telling you guys about time, and then this sweep here happens at 3:30 window, London open. But for New York traders, right, I don't know if we can make sense of these buys here, which I probably would not in this case, with this amount of an expansion lower. I believe I've already done a breakdown on these entries here, but we can do it again. Right. So what you should understand in this picture here is that this is a breaker. You can also measure that breaker. And then this is an order block, right? So powerful combination. What we can do is we can literally take shorts here, and just depends on how you want to. Here's the fair value. You got that price could tap into, so I may even go here and target these lows. Right? So we see that play out 50%. Now, if you didn't see it in that way, let's go to the lower time frame and see if we can make sense out of this. Right? All right. Right away, this should jump out at you guys. For one, here's a breaker. Right? There's your breaker. For two, series of up close candles that has fair value gap inside of that range. So as soon as price clears that, then you can literally take trades from here. So this opportunity will look like this. Cut down your risk, 13 pips, and then we should we should be targeting these lows. So let's see what happens after that. Let me close. So we're a terrible part of the day, but right idea. Cool, TP. Sorry, I haven't come back out to higher time frame. All right, cool. So the reason price is coming out here is obviously because we have fair value gaps. And we're interacting with this weekly OB again. So I would probably take profit right where this fair value gap begins. So I'm not sure, maybe, what is that, a 1 to 4 maybe? 1 to 4 on that. You would have been in up here also. I want to study this area to see if that is a true order block. Because we do have equal lows at that level also. I do like this level here. So honestly, I would probably target these equal lows. Okay. All right. Let's clear this chart out a little bit. Okay. All right, so this here, right, becomes our intermediate term high, short term high, right? So even if you traded this, then you should have been thinking, I should get a fair swing. So let's see if this holds up. Maybe this will be a fair swing. This is a fair swing, which is a short term high. But let's see if we get, if price fails to get to here, before we meet lower objectives. All right, so what we got is Asia session. The Asian high is swept. But keep in mind, we should be targeting previous day's high, right? This should be the premises of our trading because that's what price is doing thus far. All right, Asia high is taken. Asia low is taken. But what we have to keep in mind is in terms of a dealing range, we are in between this high and this low, right? So I would possibly, if time presents, I would possibly take trades, shorts from this area here. Study price a little more, 5-minute chart. Right, with everything being balanced up here, I would feel comfortable taking trades there. But we do have to keep in mind that the higher time frame order flow is bullish, right? And if anything, we would want to target, that low as a first target. Okay, but we don't get it there. I believe I did get buys on the pound USD here. So here's a case where we might have been caught up or being confused by this retracement, right? This counter trend trading here. But remember, everything has to fall in place with time and market profiles, right? So the reason that this is okay is because we're literally taking, right? We've kind of pushed almost to, let's see, are we in premiums? I believe we're in premiums of this, the overall range. But anyways, the reason that this is okay is because we've taken previous day's highs, right? We're literally seeing a failure swing here, breaking market structure, and the daily profile has been met. Has been defined because this is retracing here at 9:30. So as a matter of fact, let's point that out also. 9:30 equities open right when this mitigation happens. Right now, the reason that this, right, the difference in this is that we're trying to take counter trend trades, right, during the London session, the early part of the overall trading day, right? So if you're questioning, well, why is the perspective on this wrong, then we've just answered that question, right? This is completely different than taking counter trend trades over here. And then also, what we should do. Yeah, okay, cool. Makes a lot more sense. All right, so check this out. Dealing range low, overall dealing range high. Change the colors of these. Okay. Let's measure this dealing range. Don't mind my daughter. All right. So if we measure this dealing range, right? Price is. Let's zoom in now. So we got our levels marked. Price has already reached under and down into discounts of this range from this low to this high, right? So that would have paused our thinking in terms of wanting to go short from this level, right? So basically, we're shorting in the discounted portion of a bullish dealing range, right? So that's why this trade here should be null and void. What we should be thinking is we're overall bullish, prices attacking previous day's highs, right? And as it relates to the low down there and the high up here, we're now in discounted portions of this range. And here's that weekly order block, right? You see that, the opening of this order block? Price is literally still respecting this level. So now if we flip, with that being said, if we flip our perspectives a little or a lot, then what we'd be doing is, let's look at a 10-minute chart and see what we got here. Because you should literally see what I'm seeing right now, guys. we have the Asia low swept. Once the Asia low is swept, right, boom, we have a shift in market structure. And then what's the next thing that we look for after that? Price kind of engineers some sell side liquidity, and then bingo, we push right inside of this fair value gap. Beautiful. And then where are we targeting? Previous day's high. Bingo. Right. Now, off of this, right, here's previous day's high, right, 830, which we know is usually New York trap. We can see once that previous day's high is ran, we can see if an order block is formed, and possibly see if we could have found entries from off of this. And you know, to be very realistic, I don't see it right now. Okay, now here it is. Right. So a sweep. Here's an order block, series of up close candles before a down move, and it has the imbalance. That's the key, right? So once the low of that candle is cleared, this becomes your order block. This here is your fair value gap. Price creates a high, bingo, and then pushes down. Let's come back out to an hour real quick. Let me see where we are. Okay, cool. So we've literally just tapped inside of remember, this is on the daily chart. This is where that daily imbalance began, right? So we literally just tapped inside of a higher time frame imbalance. Okay. So once that happens, then we literally sweep, failure swing. Now we have a break of market structure. Boom. And I think price moves away with speed at this point. But nonetheless, if you're studying price and you, of course, we have to put the overall context behind what's going on. What's going on here is that price has expanded, right? It's expanded. We're at that New York trap timing, and we've taken out buy side previous day's high, and we've also just tapped into a premium imbalance, right? And so all of those are telltale signs that price could possibly go bearish. Now, once that happens, we look for signs to confirm bearish price action, right? That sign is this order block that gets created, series of up close candles, down move. Once we clear that candle there, the imbalance is formed. We can literally take trades from right where the imbalance begins, right? And then here's a ton of imbalance, and then I would probably target this low at that order block there. And then you have low resistance liquidity down here that I would probably target also. And there's a huge imbalance in here, so price is definitely going to get to this imbalance. And price moves away with speed, right? So we don't even get a chance to get back inside of that. Right. All right. Then we sweep. Push back out. One thing that I did forget to point out. All right. What is this? Here's another reason why that, remember that original short that we tried to take? Here's another reason why that short should not have engaged with that particular shorting opportunity, right? Because here is our order block. Right, the series of down close candles before an up move, and it has imbalance. Right, so price, literally, that short was literally trading against the this is the high of the weekly order block. We're trading against imbalance. We're trading against the discounted portion of a bullish dealing range, and then we're also trading against a 4-hour order block. Right. So I always like to, if I make a mistake, and we should be able to find a reason why that mistake should not have even occurred in the first place. Here's the low, previous day's low. All right, so price sweeps previous day's low. I'm not sure if there is any order block or imbalance or anything to the left that on a more fractal basis. Of course, I know that this is the 4-hour OB. Just looking to see if there's anything else that would have ticked us off to take action with this. All right, so I see nothing, and we can come to a 2-minute chart. And of course, at this point, you guys should understand and know exactly what we're looking for in every single trading idea, right? It's literally sweep. We're looking for some type of failure swing, some type of breaker. Once we get that, then we're looking for imbalance, right? We're studying the order blocks, seeing if there's a true order block formed, and then we're taking trades if time allows us to. So right here, we have a sweep of previous day's low, right? We have a failed swing, and then we have this level here breaking the neckline, right? On a 1-minute time frame. And now once that happens, what do? We trade imbalance, right? So I would definitely take this trade. I am not sure if this here worked out, but we'll see. Hang on. Under this low. Bingo. Cool. Right. So you could, be targeting these highs. Yeah, so that did work out. Okay. At this point, we've already taken previous day's high, so I would probably want to target this imbalance here. Let's look at a 5-minute time frame. Okay, so price is in a 5-minute imbalance. So I would have definitely taken a decent size of this position off at this point. I'm not sure what happens next. Now we're in London close, pushing back higher, and the rest of the day probably goes to shit. Okay. Right. So that would have been a pretty nice trade, and then that was a pretty decent trade also. And what is this? Where are we? Is this Thursday or Friday? Okay. All right. So we're pushing to Friday. Keep in mind we're still thinking that we should attack previous day's high. But what's important is that we've engaged with the daily imbalance, right? But we shouldn't try to pick tops and bottoms. We can't say because it engaged with the daily imbalance that this is the top. Now price is going to fall off. That would most certainly be the wrong thing to do. All right, so here's the London session. I don't see much in terms of if we could have caught a trade here or not. Okay. The only thing that I would say is once price sweeps this liquidity here, you get a very strong displacement, and then once this is cleared, right, you can trade this imbalance, but you have to realize you're going to be opened up to pretty big risk. I probably would not engage with this particular trade unless we can look left and find reason for price to continue lower. I think we found that reason with this low that was created on Tuesday when that previous New York session low and the Asia low formed together. So maybe price runs this level. going back just to reiterate so you guys catch it if you missed it. What's happening or what's being done on this trade is once the displacement comes and then we have a shift in market structure here, then we're trading this imbalance, right? So 26 for 68, I believe that's close to a just under a 1 to 3, highly probable. And then this area here, right? This is something to take note of. Okay, this is an order block with the fair value gap right inside of it. Okay, so let's mark this out. Let's make those levels, make that level blue. Okay. Okay, so price actually never got to that level. But what did happen is we did run out. Well, we did not run those lows. So price. Okay, here's the OB. Okay, all right. Here's an OB. This is what price is responding to right here. All right, series of down close candles, up move, fair value gap inside of it. So I'm not sure if it actually came directly to this fair value gap or if it just engaged with the overall order block. We'll mark this out just in case. And then here is overall OB. Keep in mind, this is the weekly OB that we are still inside of. Cool, bingo. See how that works? This is like clockwork, guys. So once you taking those shorts, price falls into this. Here's a failed swing, boom, failed swing here, push beyond it. Slight imbalance, but I wouldn't take that. See if we can come to the lower time frame to see if we can find what we're looking for. Balance. All right, so I don't see any imbalances in here. So what I would do in this scenario is, I would possibly wait until price takes out this particular structural point here, and you literally have to just walk the charts and see if you can find some form of an imbalance. And of course, this is an imbalance here, but boom. Okay, so this was the point of failure for that failed swing. Cool. So you could have taken entries from here. And the reason being because on the lower time frame, remember, down, up, failed swing. Now we get the displacement fair value gap beyond that neckline. So you can trade the fair value gap, or you can wait till price comes back to the neckline of this, and stops would literally go under this low, right? Boom, 19 pips. And then I would be targeting or aiming at previous day's high. Of course, I don't think price got to previous day's high, but I would at least aim towards it. Relatively equal highs at the Asia high. Alright, and then this here. Okay, so here is a day where price has trended, throughout the New York session, and then we approach the London close. So we take an Asia high. We're in that London close kill zone, and we can look to see if we get the same price delivery, right? So what do you see? Order block form inside of the fair value gap after we've taken Asia highs. Once price clears the low of this candle, now we trade the fair value gap, right? You see, this is the fair value gap. Bingo. See how price respects that fair value gap, right? So this is showing true intent to go lower. Bingo. Right above that high. And then I would probably target this fair value gap here. Boom. Okay, so it's like a 1 to 2. Just keep in mind it's counter trend, so you shouldn't even expect much out of it at all. Yeah, so that was the trading week, guys. I hope you found some value in this. I will do another to pound USD and also another to let's clear this out, to the S&P 500. Right, so I'm sure there was a ton of value in terms of what we're looking for and how to approach it, how to kind of make sense of the context around it. So I would be very, very grateful if you guys could give me some feedback, and then just be on the lookout for the next two.